All right, welcome everybody. This is Charles R. Hiring with IAMS Wealth Management here. I want to thank you all for attending our webinar today to hear a bit more about IAMS Wealth Management. I know for some of you, this might be the first time you're hearing about IAMS Wealth. For a lot of you, this has been a project a long time coming since late 2016. So we're excited to finally have the ball rolling here and be able to tell you all in a very concise manner, best we can, just about IAMS Wealth Management, what we can do for your practice, how we can help you grow your business and secure the business you're already doing. So just a little quick background on our timeline. As I mentioned, we did start getting everything going about August of 2016, getting everything in order, registering with the SEC. That registration was approved in January of this year. Since then, we've been getting our procedures, our technology, everything in place, and we were actually accepting business late April internally. We started accepting outside business just last month, and here we are in the midst of transferring over a couple advisors. So it's a really exciting time here at IAMS. We're excited to have this opportunity to officially really roll out IAMS Wealth Management, start telling the masses about it with a product that works and works well. So I'm excited to be able to tell you about that today. I'm joined by Ryan Bohr. He is the CEO over at Fusion Capital Management, and he'll be talking a little bit later about his role and what Fusion plays in conjunction with IAMS Wealth Management, but he's been a valuable resource so far for us. So we're really excited to have him on our side. But before we get going, just a couple housekeeping items. The phone number you see at the bottom of this slide is our IAMS Wealth Management direct line. So if you call that number, 888-255-7670, that'll ring a different tone in our office, so we'll know it's an IAMS Wealth Management call. If you ever call in the typical IAMS number, you can always ask to be transferred over to someone on the IAMS Wealth Management team, and we can do that as well too. We just want to make it as simple as we can for you. Secondly, we will have an opportunity for questions at the end of the webinar. So if you have anything that piques your interest or that you're curious about as we're discussing a lot of information here, definitely type that in and we'll get to as many of those as we can. And then lastly, I do want to let everybody know that this is going to be recorded. So if you forget one thing or want a refresher on one thing, you can always go back to our IAMS Wealth Management YouTube channel and view this again. Otherwise, if you get in touch with us, I'm happy to send you a link directly too. So for some of you, this might be a little bit of repeated material, what we're going to talk about. This is really just a shortened version of what we've done at some of our meetings that we've had with advisors and prospects. Typically, those meetings go day and a half, and we're able to discuss all this information in depth. What we're hoping to do today is really give it to you in a concise manner in about 45 minutes to at least give you a high-level overview of everything IAMS Wealth Management is hoping to do and what we can do and what we can do to help you grow your business. So I'm sure today we'll answer a lot of questions, spur more. Please feel free to reach out. We're happy to help you however we can. So with that said, we'll get rolling here today. What I wanted to first bring up is just a little bit about IAMS Wealth Management. I know we've talked about this already a little bit, but what we are, I guess what our mission statement is IAMS Wealth Management is an insurance-friendly asset management solution built with the advisor our priority. And that's a pretty unique spot to be in from feedback we've heard from other advisors and agents we've discussed this with. And really, it's unique in a couple ways. One, a lot of RIAs out there don't really support insurance business and product business just because they see that as assets that might come in the door and then part of it leaves. We definitely see the value in that, the value of our advisors being holistic, being able to offer solutions on both the product side and the managed money side. And that's going to be part of the goals we talk about on the next slide. But we absolutely encourage that. Insurance Agency Marketing Services, the FMO, has been in business for 31 years. So they bring that expertise to the table where we can really be a full service house to help you provide a more holistic view on your business. The second part of that is that we're built with the advisors our priority. And that is unique too, just because we're not trying to compete with our advisors. We're not marketing to the end client. We're trying to market our advisors to the end client. And a lot of people get really excited about that. And we'll talk about that a little bit more later on this webinar too. But our goal is to build your brand, not ours. We don't want to overhaul your business. We don't want to tell you how you have to do things. We just want to support you, help you grow in a way that simply product business might not be able to help you. So the rest of the slide pretty much just goes into what we do and how we do it, about arming advisors with tools, training, and support, and providing technology capabilities and expertise. And we'll discuss that all pretty at length here today. So what are our goals for agents who come to IAMS Wealth Management and introduce themselves into the advisory space, or for anyone that might move a book of business over? Well, first and foremost, the overall goal is just to provide better service to clients. And all these three you see listed here kind of follow after that. So when you're providing better service to your clients, you're going to see increased revenue. One, obviously, that comes from the managed money fees you're going to earn. And for a lot of people, that's a nice revenue stream to be able to rely on. We actually pay out monthly. So for someone who's doing commission product business and managed money business, you're going to still get those commissions you get on that product side, but then you're going to have this recurring revenue stream coming in monthly that you can lean on, rely on, and know is going to be there in your bank account. The second source of revenue is just simply improving the existing business you're already doing. Just because these new capabilities will allow you to have broader conversations, see a wider demographic, most likely you're going to see an increase in your fixed business as well. So that's one thing to definitely keep in mind. Secondly, we're hoping we could get you to have strengthened client relationships. When you're an advisor, you're a fiduciary, and that does set you apart from other agents or other brokers who might not be held to that same standard, because you are obligated to act in the client's best interests, and that can be a sizable marketing advantage. And two, clients like that just because they know you're not just trying to sell them a product for the sake of selling them a product. You're sitting on the same side of the table as them. So as their account grows, the percentage of your fee is going to grow. As their account takes a hit, your fee percentage is going to take a hit. So you're really sitting on the same side of the table as them. Your interests are aligned, and clients really sense that and get good feedback from that. And lastly, we're hoping we can get improved client retention. Just because you are able to be a full service advisor, no longer do you have to purely touch the product side of the business and refer some of that market exposure to a broker that you might have a decent relationship with. You can be that full service advisor and retain all of your clients' assets. And as we talk later too, we'll tie in some of the technology and how we can help support that as well, retention wise. But before I hand it over to Ryan, it's a pretty good lead in talking about some of our strategic partners. When we first started this operation back in August, putting the pieces together for IAMS Wealth Management, we knew we'd need great partners from the get-go to help us grow and scale at the rate that we expect to. So I've listed just a few of them here, but there's more as well. And we're going to be talking about these a little bit later on today. But the one I want to hit on first is obviously Fusion, and that is who Ryan is with. Fusion is the operational arm of IAMS Wealth Management. So they are the ones who are actually managing our investment platform, doing the business processing, doing the day-to-day rebalancing and trading on the accounts, and seeing that side of the business through. As I mentioned earlier, Ryan's been a really valuable resource in putting IAMS Wealth Management together, and I can confidently say that any other group would not be able to have helped us get to the position we are today. So we're blessed to have them on our side, and with that said, I'll hand it over to him to tell you a little bit about Fusion, and then that'll lead right into our investment platform. So Ryan, floor is yours.
All right. Thanks, Charles. Appreciate it. And thank you, everyone, for taking time out of your busy schedules to join us today. Just a little bit about Fusion. I started the firm in January 2011. Was actually an executive at an insurance organization in IMO, running their RA. So that's really where I got introduced to the insurance world. And today, as it stands, I would say probably 95 to 99% of our representatives and partners that we work with would probably consider themselves insurance professionals first, and then adding the managed money second. I think that's important because as we go through this and as we continue to grow our businesses together, I think it's important that you partner, as Charles had touched on, it's important that you partner with someone who really understands really what your focus is and what your goals are. And we definitely understand what insurance producers and financial professionals are really trying to accomplish. And so we started this, we broke away from the previous firm in January of 2011. And basically we started as what we call a direct RIA, but we quickly grew into what we call institutional, where we work with, groups like IAMS and a few others. And we prefer that. We're really good from an operations standpoint, technology standpoint. We're not the best marketers in the world. And so we really lean on our partners to, we want them to grow their business, and we want to focus on, providing good service, good operations, and great technology. And so we've had good growth. We haven't marketed really at all. We did one mailer to start. We've grown from zero in assets to under advisement, about 750 million to date. And there's some other outside of that we can't include, but it's a pretty large number. So we're very happy with what we've created. And again, our goal here is to create systems, capabilities that ultimately lead to results for our network of institutions and advisors, and ultimately the mutual clients. So that's a little bit about Fusion. Let's go ahead and get into the platform here at IAMS, and really just start with a basic overview of what the differences are between an RIA and the most common thing we run up against, which is a broker-dealer. And so here's a couple of key differences between an RIA and a BD and the registered people that are affiliated with those entities. So the primary function of an RIA is to provide advice. When you look at a broker-dealer, their primary function is to facilitate securities purchase and sale for their clients. So now this has morphed a little bit over the years, but that is still the primary function of a broker-dealer. Compensation, this is really where it starts to get different. Typically, obviously on the RIA side, we're charging a flat fee for the advice or a percentage of assets under management. And the broker-dealers, just like everyone knows, it's traditionally commission-based. So if you sell a security, you get a commission on that security. When it comes to the responsibility to our clients, we're held to the fiduciary standard, so we're legally bound to serve the interests of the clients, whereas the broker-dealer are more on the suitability standard, which ensures the investment recommendations are suitable for the client and provide the best execution of the client orders. And then finally, when it comes to the regulatory body, we're overseen by the SEC, whereas the broker-dealer is regulated by FINRA. So those are some of the key advice or the key differences. One thing I'll point out, and we cover this all the time at our meetings when we go through this, there's really nothing that an IAR of an RIA can't do that a broker-dealer can't, or a registered rep of a broker-dealer can do, except collect a commission. So our IARs and RIA partners can allocate, stocks and different things, non-traded investments in accounts for a fee. It's fee for their advice. They just don't get a commission. So important point to note there.
Yeah, I would definitely agree. That's some of the stuff that we hear most when agents call in. They're curious, what's the difference? Why should I be an IAR versus a broker-dealer rep? There's really no better or worse way, but we just like to outline the differences so that way people can make the best decision when they're going about forecasting how they want to move their business forward. So that, I think, is worth hitting on. So thanks, Ryan.
Yeah, and one more point on that too. I'm definitely not saying one is right or wrong. We think there's certain advantages to the RIA space, but there are certain cases where it may not make sense. If you're a producer that has a lot of variable annuity business and you have a lot of variable annuity trails, that's something where you probably will need a broker-dealer. There are some alternative products that you won't be able to get access to at an RIA because they may not offer those at NAV. In that case, if you do a lot of those products, you still may need a BD. But generally speaking, when we work with advisors and from the advisors we've spoken to with IAMS, generally I would say probably a good majority of the people that work with a broker-dealer don't necessarily need to be affiliated with that, and they're just not aware of that. So, and if you do have questions about that, feel free to reach out to Charles. We can always coordinate something, but he's versed on the topic and can definitely coach you through if it makes sense or not. So the one thing we always talk about when we are positioning yourself, we work with a lot of insurance professionals, and one of the major obstacles that some folks run up against is positioning themselves. They may have sold against the market to increase their annuity sales, over the years. So we always ask the question, is there a common denominator amongst how everyone positions themselves with clients and prospects? And so when we're in meetings, we ask this question to folks, and Charles can attest to this. Most people have a similar value proposition when we're talking about the insurance space. It's usually something of protecting or securing retirement income or assets or something of that nature. And what we really want to urge people to do is really position yourself just a little bit differently. Position yourself as being an expert at managing risk, because regardless of the product that you're selling or advising on, there's risk associated with it. There is risk associated with an FIA. There's risk associated with life insurance. There's risk associated with managed money accounts and so forth. It's all different types of risks. So we think it's a big value add to position yourself this way. It is going to make the client or prospect ask you some questions about what you do, and you can lay out some things that I bet you some other advisors probably haven't laid out for them in the past. So just think about that as you go forward and position yourself. Think about positioning yourself as an expert in managing risk. So when IAMS developed this platform, we were working with them and putting together some ideas. They really wanted to have three key focuses. They wanted to have a focus on suitable risk allocation, a focus on the overall investment process, and which ultimately those two will provide good risk-adjusted performance. The suitable risk allocation, we've built a good risk-based profile system which will help allocate to an appropriate model. We have a good firm investment process to, again, allocate those assets accordingly to the appropriate risk profile. And ultimately, if we manage risk well and we're investing in a suitable strategy, that risk-adjusted performance should follow for those particular clients. And ultimately, this system here, which I think is, again, is important to note, is really built around asset gathering. We want, the producers to really understand the high level of the system so that you can feel confident and go out and gather the assets and just know that, behind the scenes, we have a number of different people managing the accounts and making sure from a compliance standpoint you're in good order as far as the allocation and so forth. So really, this is really built around gathering assets. Charles, do you have anything you want to add on that?
No, I think you really stated it well. And as we get along further here, a couple slides down the road, that'll really become, I think, more apparent, just because one of the holdups that a lot of people have when they consider opening a book of business, transitioning over to the managed money side, is they think, it's going to be a lot of time, a lot of effort, a lot of expertise needed. What we've tried to build is a platform that takes a lot of that worry and stress off your shoulders and puts it on our reliable team here, who is more than happy to do it and support you in a way where you can go out, really be the relationship manager, be the one interacting with clients and prospects, building those relationships and growing your practice that way. And where your team back at the home office here at IAMS and Fusion, they're going to be doing a lot of the day-to-day grunt work for you, so you can be out doing what you're doing. So I think Ryan put that very precisely with which we look to do, and we're thrilled with the early feedback and results we've had. But here, as Ryan talks a little bit more, he'll get into how that actually works for you. So here's just kind of how our domestic equity portfolio and our fixed income portfolio merge together to make a suitable risk allocation in this example.
Yeah, so we utilize a core allocation system. So every client that comes in, you'll fill out the risk questionnaire. We'll touch on how it lays out here in a moment, but every person will fill out the risk questionnaire, and every core allocation is going to be will consist of a domestic equity portfolio as well as the fixed income portfolio. And we'll get into some details on those as well. The nice thing is if we go to the next slide, you'll see how easy this system can be. And again, you can make this really as easy or as complex as you want it to be with your clients. The nice thing, again, when you fill out the risk questionnaire, it'll tell you you scored 55 and you should be going into profile 5. Well, if you go into profile 5, you'll be in 50% equity and 50% fixed income. If it was profile 7, it'd be 70% equity. So basically every profile has the equal number in domestic equity. So 1 is 10%, 2 is 20%, and so forth. You can see on the chart here the time horizon as well. Your shorter term time horizon is profile 1, going out to your longer term or more aggressive is profile 10. And then we've also, we really want to set everyone up for success. So we've put what we think are very achievable target rates of return net of fees for each of the profiles. And this is just on the core allocations as well. So again, pretty easy system to utilize. but we can make it very complex if you have an engineer type by drilling down into the individual portfolios. And we'll start to get into that coming up here. The nice thing about the system as well is you can really customize this to the individual client needs. So instead of it just being the core, if they do have a special circumstance that comes up, you can add a additional strategy to that portfolio. In order to do that, we really want to kind of talk through those strategies and probably do it in a little more of an advanced setting. So for today, just know that you can customize a portfolio if you need to, if there's a special circumstance that comes up, such as, you know, a client wants to hold real estate. So we have some options for that that you can use to complement the core allocation. So if you really take a look again at how it works, you have your core allocation. In this case, we had our clients who scored out as a profile 6. So they're allocated to 60% domestic equity, 40% fixed income, and then again, in my example that I laid out, they wanted to utilize some real estate. You know, maybe they'd invested in real estate in the past, and they wanted to have some of that in their allocation. You can then allocate that, and then you'll see what their total portfolio looks like below there. It's completely customized or tailored allocation to that client's specific needs.
Yeah, and I think that's worth kind of repeating what you had discussed a minute ago. Just really what we built is something that can be as simple as you need it to be. 90% of the time, you know, you might just meet with clients and that core platform is going to be perfect. That's going to be all you need. It's going to be tactically managed, which Ryan's going to discuss here in a little bit. But for 90% of the clients, that's all they'll need to have. And then these special scenarios where you have a client who might want these different satellite options, the example that Ryan talked about, you know, real estate, we have that capability too. So it's simple at its core, but it has the ability to grow and modify into whatever you need it to be to meet a client's needs. So we like that feature, absolutely.
So let's go ahead and dive into those core portfolios. Like I said, we're utilizing a core domestic equity strategy and a core fixed income strategy. Both are using relative strength or momentum investing. And momentum investing is really a technique that compares the performance of a stock, ETF, or mutual fund to that of the overall market. Easy way to think of this is the trend is your friend. So if there's a trend within the market, you can kind of see that taking place. You look further into different sectors, different market caps to see if there's a further or deeper trend, and you invest in those. So when trying to explain momentum or relative strength, the easy way is to just simply say the trend is your friend. And, you know, it's a little more complex than that, but I think it lays it out nice and easy for clients where they could potentially understand that. So let's go ahead and dive into what these strategies look like and how they work. So both strategies use a number of different factors to really research and determine what positions we're going to be utilizing. So what we have here is just the 3 factors that we're going to look at. There's a couple others that, again, can be utilized. But in this instance, both of them do use a 3-month return, a 20-day return, and a 20-day volatility. And you can see by those factors, we're trying to find the trend or the momentum within those strategies. So we have 3 ETFs or sample ETFs there, and you can see the data for those data points within that chart. So we're going to go ahead and put those all in the scorecard, and then we're going to start to rank them. Each category that we're looking at has a weighting. So in this example, and again, this is just an example, these aren't the actual weightings, but 40% is going to be weighted towards 3-month return. So you see the ratings are, the returns are all up top on the top chart. On the second chart, we're ranking each one of them. So if you look at AAA's 3-month return, it was number 2. The top one was BBB, and then CCC was the third in that group. And so what you do is we rank all these, and then if we look at the next slide, I think there should be a scorecard of how we rank it out. So basically what would happen is you take that weighting times their rank, and that gives you the overall scoring. So let's go ahead and take a look at an actual strategy, how it performed. And this is the actual domestic equity strategy from the core portfolio, and this is for the first quarter of 2016. If any of you remember what was going on at that time, there was quite a bit of volatility. Markets weren't really performing all that well. And so we thought we'd illustrate that period just to kind of show you how this works. So on the top chart, you see how each position ranks. Those are the available options within the domestic equity strategy. So it can invest in any of those 6 options. And if it doesn't, invest in one of those, it automatically defaults to SHI, which is short-term treasuries. And so what we did is you can look at the scoring, how they ranked below. IWP and IWS and IWF all qualified because we only hold the top three. However, the only one that qualified out of those top three was IWF. Reason for this is because we also have a moving average trigger in there. Again, it's another trend indicator that we follow. And so IWF was the only one that qualified. It returned 22 basis points for the period, and the rest of the money was invested in SHI, or short-term treasuries. So it returned 60 basis points. And if we go to the next slide, this is really where you'll see how this benefited folks by utilizing a strategy such as this. The strategy volatility was about 5.8% versus 18.5%. So we reduced the volatility in that period by almost 70%. And the gross performance data, the strategy returned 83 basis points versus 133 basis points. So risk-adjusted performance, it was really, really good for that period. And most importantly, by eliminating that volatility, it reduced probably the number of client calls that advisors received and so forth. But again, I think it allows the clients to stick to a strategy by creating a little bit of a smoother ride. When markets get really volatile, there's data everywhere that shows clients make irrational decisions. And unfortunately, most of the time, they're the wrong decision to make. So by helping create a smoother ride, I think we can help our clients over the long term. A couple of things to point out about this real quickly. These strategies work extremely well. Momentum investing and tactical investing in this scenario works extremely well in down markets. Should definitely be outperforming in that situation. In up markets or bull markets, we should be performing well. The hope is to meet or beat the index. We're not going to do that all the time. The goal is to do that over time. We might lag in some of those bull markets just because, when you're making tactical moves, sometimes the move doesn't get you all the alpha that you're looking for. The area where you run into issues with these, and luckily these have worked out, well, is in sideways markets when you can't really define a trend and there's just a lot of volatility moving back and forth. That's really where you run into issues with tactical investing. And I'm sure you've all seen it with hedge funds and everything else all over the news, how they've struggled the last few years, and that's simply because of the up and down volatility within a tight range in the market. So it's tough to really find that defined trend. So,
yeah. And then I would just add that I think it's important to note too, for this quarter that it's showing, this domestic equity strategy, this ranking process does occur each quarter, and this rebalances quarterly. So it's nice to know that as an advisor, once you get someone in this strategy, it's going to be tactically managed to run with the market and stick with the client's risk tolerance. But that's all going to be done on your behalf. You're not going to have to sit and check trends yourself. You're not going to sit at your computer and be spending time making trades when you could be out building relationships. So that's a lot of the value we think this brings, even beyond just the performance and the volatility aspect. So I just wanted to chime that point in too.
Perfect. Yeah, that's a good point, Charles. If you look at here's a 2016 sector ranking, so you can kind of see over time how each one ranked in any given month. The illustration I showed you was January. We stayed in IWF. This one trades quarterly. So even though nothing was qualified in February or March, we stayed invested in IWF and SHI. You can see IWD did qualify in January, but it's below that dotted line, which is us only holding the top up to the top three positions. So you can see as the market really picked up, we were fully invested, or we should have been fully invested for most of the year in 2016. So the strategy did well throughout the year in 2016. So let's go ahead and look at the domestic equity allocation compared to the growth of the S&P 500. So what this chart is illustrating, I love these charts because it just kind of shows you what the broader market did, which is that white line that goes through the chart, and then where the strategy was allocated in certain time periods. I tend to jump to 2011. It was a pretty volatile period, and you can see defensive allocation, or SHI, SHY, is that gray area that you see on the chart. The dark blue is the large cap allocation, small cap allocation is the lighter blue, and the mid cap allocation is the intermediate blue color there. So most of the time you're invested in those large caps. There's certain times where you invest in defensive. A lot of folks jump to 2008. You can kind of see where this would have been allocated. It wasn't available in 2008, but it is an algorithm. So this is just a back test showing what the algorithm told us to invest in that period. So I believe it was completely out in the fourth quarter of 2007. So it was able to, the algorithm was able to dodge 2008. So pretty powerful chart showing the moving allocation of the domestic equity portfolio. If you just look at a couple of key numbers, this is all the results from the back test. Some of this is live data. Most of the older years are back tested data just to illustrate what the algorithm had done over that time. If you look at the Sharpe ratio, there's a couple things I look at on this chart. Sharpe ratio, one of them, we call it the bang for your buck ratio, and that's really a big thing when you're looking at risk-adjusted returns. Sharpe will always kind of indicate to you how you're doing. If you're doing it at 1% or higher on the Sharpe ratio, you're doing extremely well. Even 75 basis points and above, you know, is pretty good. So we're happy with that. Below, winning periods. A period is a quarter, since we trade on a quarterly basis. So winning periods, this has won over time almost 81% of the time, given the back test of it. And periods outperformed the benchmark, meaning outperforming the S&P on a quarterly basis was almost 67% of the time. And then you can see the best and worst period. The drawdown on this too is obviously significantly different than the benchmark, which I think, again, if we can avoid some of that volatility, hopefully we can help our clients avoid making, you know, some of those irrational decisions with their portfolios.
Yeah, and then we do have fact sheets available. So if anyone wants to get a tangible, you know, sheet of paper in front of them with this information and some additional bits and pieces of knowledge, let us know. I'm happy to get that over to anyone who wants to see it. And we have this as well just for our fixed income strategy. For the sake of time, you know, there's nothing really groundbreaking here we need to discuss too much, but here it just shows you comparison to the domestic equity strategy. Well, this is how the fixed income strategy was allocated in 2016, and it's a little different just because it uses a core and satellite model internally, but it really trades the same way. It follows the same rules. It just does that on a monthly basis instead of quarterly. So again, here we have some numbers that are, you know, partial returns and partial back tested, as well as these other ancillary bits of data. But we do have fact sheets, like I mentioned. If you'd like to get one for each of our fixed income and domestic equity strategies, just let me know. I'm happy to mail that out, email it over, so you can get it in front of you and learn a little bit more. So from here, I think that was a pretty good overview of our platform. This leads us into our tools and technology portion, but realistically, I think one of the biggest tools that we offer is the platform itself, because it's doing a lot of work for you. It's simple to allocate to. It's simple to correlate to a client's risk tolerance. So we definitely want to stress the value the platform itself brings. But I will touch on here just a few of the other features that our technology and processes bring to the table that are meant to keep you with a seamless business, an efficient business, one that's transparent for you to be able to follow, and one that's within the bounds of compliance standards for record retention and whatnot. So we'll be talking through this pretty quickly. Again, this is high level. We have actual videos for each one of these different things I'm going to be breezing over here on YouTube already that are about 15, 20 minutes each. So if you'd like a more in-depth look, absolutely feel free to refer to those. Otherwise, I do oftentimes do one-on-one demos with anyone who's curious, where I can share my personal screen with you and run you through Advisor World or what an advisor portal would look like through Orion, or how kind of our form tool works. So we'll be touching on that. Here, this is kind of getting into what we're going to be talking about in the next 15 minutes or so. So the one we're going to talk about is our proposal generation software. And this is Advisor World, and that's what Ryan had touched on. Is going to assess the client a risk score based off a questionnaire, and that risk score will then correlate to one of our 10 core profile options. The operations portal is really the next step of the client process. Once someone wants to invest their assets with you, it'll go through the operations portal to get the form builder tool to get the documents made up and be submitted through our service portal. Once that happens, we're going to be talking about the account portal quickly, and that's what a client's actually going to log into and have 24-hour account access to see how their account is doing. Obviously, they'll be getting statements from TD Ameritrade, our custodian, but this at least allows them, a weekly check if that's something they want to do every Sunday, or even someone who wants to look on a day-to-day basis. It does update daily, so if someone wants to follow their account, that precisely, this gives them the option to do so. And then the last nice bit of this portfolio option is just the fact that we can incorporate comprehensive portfolios. And we'll touch on this later too, but you're able to actually bring in outside assets to report on. So that way, if a client has an annuity with you or a savings account, or let's say they have a liability like a loan or a mortgage, all that can go into the balance sheet. And then you're really the go-to representative for that. And we'll talk about that a little bit later on. One thing I definitely want to touch on, because it comes up a lot, is just our support that we provide. Ryan already talked about, but the rebalance portfolios, we do a lot of that day-to-day grunt work, so you can be out there meeting with clients and prospects, and we save you a lot of time in that regard. Secondly is our marketing support. I've posted just a few examples here of documents we've made for some of our advisors, and what you'll notice is that one, obviously has the IAMS Wealth Management branding. If you want to go off our branding, you can absolutely do so and feel free. Others, though, do like the look of their own logo being out there with their own branded materials, so they can go out and really build their brand, and we support that 100% as well. So there's just a few of the examples of pieces we've created already, and this is a ever-changing and ever-developing marketing suite. So if there's anything you're ever out there with a client and think it would be valuable to have an additional flyer or additional piece you could leave behind after a first meeting, just let us know, and we're happy to go ahead and get that in development. And then the last point was billing. We talked about this earlier, but we do bill monthly. So that automatically comes out of a client's account. But at the same time, you get monthly deposits into your bank account based off of an average daily balance of the assets you're managing. So that's pretty unique. A lot of the other groups and RIA firms do quarterly. So we like the idea of having monthly, so it's a reliable income stream to be able to touch on. And then last but not least, in regards to support, is just the actual tangible support we give you with trainings and orientations. Every advisor that comes through our system will attend an initial orientation, just so we have everybody starting on the same page. We have one actually coming up in late July that I'll discuss at the end of the webinar. But that's just an event where you can come in, really learn what we're talking about here today, just more in depth, so that way you can be proficient with it, confident with it, so when you go out and meet with clients, you give yourself the best chance of success. We do have follow-up training videos on YouTube. We have a frequently asked questions document for anyone to refer back to with the topics that we get the most questions on. And then we do one-on-one demos frequently with someone who says, I need a refresher on Advisory World, or can you show me how to work the account portal? It's a quick 15-minute meeting. I share my computer screen with you, and then we get you up to speed, so that way you have a good understanding of what you're doing, and you're better off. And then the last thing I'll touch on is the fact that you have multiple resources. When you're with us, you're not only going to lean on us. You have Fusion to lean to. On the operational side, if you have any paperwork questions or business submission questions, Advisor World, Orion, and Redtail are all tools that you have at your disposal, and they're all part of the package that you get with IAMS Wealth Management, and they have their own customer support departments too. So yeah, you will get precise help on any area of the business that you have questions in. So keep that in mind. So with that said, we're going to just do a couple brief overviews of Advisory World, the operations portal, and then the account portal, just to give you an idea of what the business looks like when you're streamlining it through our system. This will be, again, a quick overview. Advisory World, typically this is a 20-minute demo. We'll probably do it in 2 or 3 minutes. Same with the form builder and the service portal and the account portal. But this is just to give you a general idea and to spur some curiosity. And if you have any follow-up questions or want to see something more in-depth, definitely give me a call or check out our YouTube page with some in-depth demos we already have on there. So Advisory World, this is the page that appears after a client enters in their risk questionnaire. So in this example, a client's score was a 52. And what this is displaying is their risk score combined with a 90% confidence of percentage returns and dollar returns. So someone who has an initial value of $100,000, this is really the range of expectations for these assets. So you can either accept that questionnaire score, or if a client talks to you and says, I don't think I'm actually even that risky. Well, you can manually shift that to be really any number you want it to be, and then you just accept that manual risk score. But at least that keeps you the advisor in the equation, and it allows you to really offer the advice that really, I guess, syncs up the value of the fee you're charging. So when that happens, you're going to be able to run a report. And here's just a few screen caps of pages from a sample report I ran. This is, I understand, a little blurry, so I apologize. But the point really, it's just in what you're seeing. So the top of the left page is the risk dial for the tolerance. And in this example, what you're seeing is someone who is going to be closer to a 30 with a precise investment allocation. And then you can actually pull in their outside account that they might currently have over with their current broker. And in this example, that account was invested as if they were a 73. So right off the bat, you have an immediate marketing advantage where you can say, hey, right now you're currently invested as a 73. Our questionnaire says your risk score should be more in the 30s. Let me show you how I can better allocate your risk tolerance. And that leads into the rest of the proposal. On the right-hand side, there's some historical performance. So you're able to talk with a client about what their current holdings have done, what your proposed holdings would have done, and really get down to the nitty-gritty that way. Going on to a few other pages, it gives you a risk versus return matrix, so you can compare and contrast with clients, what value you're bringing with your new proposed portfolio versus some of the standard deviation that would reflect in their existing and current portfolios too. So it helps position yourself. And one thing I always like to tell advisors who run reports is that each report's going to give you 4 or 5 different leverage points to really bring up with the client, and none of those are really going to be the same from report to report. So you just need to get familiar with it and be able to position yourself best. And one way I think that can really help that is actually on the next page, which is the performance disclosure. And this is a lot of information to go through. But one area I always try to hone in on is the right-hand column, which is expense ratios, which are the internal operating costs of a lot of these funds that typically clients won't even be aware it's happening when they're paying their broker maybe 1%. They think that's the all-in fee. Well, we've ran across clients who have had a broker charging them 1%, but they might be in a certain fund that has an expense ratio of 1.5% or 1.75%, and that's just all-in fee. What we do is a little bit more transparent. We charge the fees up front, and for the expense ratios, because we're in ETFs, those are significantly lower. So when you're going through a proposal like this, that 9 times out of 10 is going to be a good advantage for you to bring up as well. So that's just a really, really quick recap of Advisor World. It's going to be a useful tool for anyone using our system to really position themselves, one, from a marketing advantage against what a client's current holdings might be, but then 2, it's nice to alleviate the worry of emotion or bias being a risk when you're making a proposal. This correlates it directly to our platform. So from there, let's assume your client wants to move forward with everything. Well, then you'll be using our form builder tool, which really is meant to simplify the paperwork process. So from here, you can start a new application. It'll take you to a page that looks like this, where you select all this information. So you put in the client's name, the account type, whatever you're trying to open or move over. You can put in the expected value, the fact if it's going to be a wrap or a non-wrap account, and then put in your advisor name. At that point, it'll populate all the forms that are required. So everything you'll need will be pre-populated here, so you're not left pulling and wondering, am I submitting the right forms? Here, it does that for you on your behalf. And so when that occurs, it'll take you to the actual form builder page where the forms populate. And in this example, it's showing you an empty set of forms. One nice thing we have with our integration with Redtail is that that's your CRM where you can enter in client and prospect information. Let's, for the sake of this example, assume that you have this client's information already in Redtail. Well, you can pull all that information into these forms directly. So anywhere where a first name or a last name might be, birth date, social security number, all that will be pre-populated with that data from Redtail, which is really going to save you some time and increase paperwork efficiency. But here what you're seeing is just a sample of a blank document. And so let's just say in this example, you don't have that client in Redtail. Well, that's not a problem at all. You just manually enter in the information, but it still has the nice feature of anywhere you enter in, let's say, a first name, it'll populate the first name everywhere else in the forms. Same with address, with last name, with social security numbers and all that kind of stuff, which again will reduce paperwork errors. It'll increase your efficiency. And then it's nice because it will actually remind you of all the areas of the paperwork you need to submit information, so it won't let you submit an incomplete document. So when it's go time, you have everything filled out. There's a couple different ways you can actually have the client sign it. One, if you click in the top right of this page you're seeing and click on sign, you can email a document over, and they can do this all electronically through DocuSign. Otherwise, if someone's more familiar with the old school way of printing off a contract, having them read it and sign it tangibly with ink, that's fine too. Either way, once that's done, it's going to be submitted through our service portal, and that's, I guess, commonly referred to as our ticketing system. Ryan, I don't know if you're still with us, but if you want to go ahead, I figure I'd let you talk about the service portal, since it was a really unique idea you guys had to get this started.
Yeah, sure. I guess the story I always tell, some people kind of laugh at it, is, I was working at the IMO, our team, we were kind of working through I had just gotten there, we were kind of working through some operational things, and I ordered pizza online from Domino's, and I was just kind of watching the pizza be ordered, and I just was completely amazed that I could see who was putting the pizza together, who threw it in the oven, who was, reviewing my order, and who was out for delivery with it. And the firm I was at had an issue at the time with, communicating changes and different things of that nature within their various systems to the reps. And so we thought, that'd be really cool if we could build something like that. And so we ended up doing that. We have a new version that will be coming out here in the next couple of months. But what you see here is you can track every single request you take on with IAMS Wealth Management. So if you send in a trade request, you'll see it, and you can track it every step of the way. Same thing with a new business request. New business comes in, you can track it every step of the way. You can see all the different tickets that we have there. This is really good for a number of reasons. One, it creates the mutual accountability on both our parts. We're all human, so we definitely will all make mistakes from time to time. The nice thing about this is if there is an error that comes up, we'll be able to take a look at it and say, if this is a one-off, just human error, or is this something that's systemic that we need to dive into? So it does create a lot of accountability, like I said, on both parts, but it also does create a high level of transparency for really everybody in the system. I will say it is a little bit of an adjustment if you've worked with some of our competition in the past. You just call in or you send an email, and it's kind of like going to a black hole. This is really bringing everything to the forefront, and so it takes a little bit of an adjustment at first, because you didn't know that some of these things were going on in the background previously. So generally when people transition, we tend to find some mistakes that happened at previous firms, just because, again, everything's at the forefront. So we find this to be extremely valuable, helpful if you have a team, because you can see what they're doing at any given time as well. So if they have a couple different tickets open, you can review those and see what the status is. We always tell advisors, check this for 5 minutes at the beginning of the day and at the end of the day, just so you can kind of see what's going on within your practice.
Yeah, and it's worked seamlessly for us so far. It's nice, even just from personal experience, using it on certain accounts we've set up here internally. When you submit new business, you get an email that the business has been submitted. Every time that someone at Fusion touches it and either needs something from you or processes it through to TD Ameritrade, you get a notification. So it does keep you up to speed every step of the way. And if for some reason, let's just say you're curious about a new business ticket you've submitted, well, there's actually a direct phone number for our operations team down at Fusion. You can call in, reference that ticket number, and someone can help you immediately. So there's not even the confusion of, I'm calling about, Joe Smith's IRA account. Can you give me an update? And someone's having to go through there and sift and figure out what you're asking. There's a direct ticket number associated with whatever you submit. So it's just really simplified, and Ryan touched on it too, but just well documented, thorough. So that way, if we ever need to look back at, what we did with Joe Smith's account 10 years ago, it's in the system. We have that. We can track that, and it's well within compliance standards. So we're excited about the feature that this service portal brings through Fusion to the IAMS Wealth Management table. So thanks, Ryan.
Yeah.
One thing here with Orion, this is just kind of a sample page of what your login would look like for a client. Here is one that is more, similar to what you'll be seeing when a client logs in. So when a client gets on board, let's assume that you've gone through Advisor World, ran that, they like what they hear. You go ahead and populate the forms. They sign all the documents. You submit it through the ticketing system, and everything goes through seamlessly, and they're all set with an account. Well, this is a sample page of what a client's going to see when they log in. So you'll set up a client account through Orion for any client through your advisory practice. And this example you're seeing is an IAMS Wealth Management branded page. So for any advisor that comes through us, you can leave the branding as is, as you see now. But if you want to change that logo in the corner, it can be your logo. You can change that blue color hue to match your logo as well. So it really personalizes it. On the right-hand side, towards the bottom, you're seeing a little advisor section. So that's going to be your headshot, your phone number, your email, your address. Anything a client might need to know about you will be just smack dab right there. So every day or every week or every month, when they're checking their assets, you're going to be the face next to it and the name they recall. So we like that aspect of it for sure. And then here is just a simple overview page. We can go into more detail on another webinar where we actually talk about the different pages you can go in and see. But for the purpose of this example, this really tells you and shows you what you need to know about your Orion account portal for client access. The one I just want to touch on quickly, which I mentioned earlier, is the balance sheet. So here, it allows a client to not only track their managed money, but they can bring in some cash they might have put away somewhere. They can link it to a checking account or a savings account. You can get linked to an existing annuity they might have through you, and then they can put in any liabilities like loans, mortgages, and whatnot to get that overall net worth. So I personally think this might be one of the most valuable things that this portal brings, because that way, I can just say from experience when I'm trying to check on a checking account here, a different investment account there, and getting all that data together, it's sometimes pretty tough to get a tangible number, and it's time consuming. But here, if you have a balance sheet, you can check this once a month, see your net worth and get a good gauge and everything. And then it's going to be your face next to it. So when a client logs in and wants to see what their net worth is, it's very clear and concise that you're their guy. If they have any questions, they have your phone number right there. Even in the Orion app, there's a page for the advisor. So they could just go through the app, log in, click on your advisor page, touch your phone number, and call you directly. So there's a lot of different ways to interact with Orion. But this is just a simple overview, and I hope it shows the value that this brings just from a branding perspective too. So to tie things off, and I know we briefed this quickly, but to tie things off about the value that each of these aspects bring, I guess we'll go back to what Ryan was talking about with the platform. Our platform, the way it's built, takes the stress out of developing your client's portfolio. It does a lot of that rebalancing itself, so you never have to feel like you're not doing enough for your clients. The portfolio is going to consistently be working for your client, so we alleviate some of that stress there. The strategies we have save the hassle and liability of trading on your own. I touched on that I guess previously, but it's just worth restating that a lot of people that we talk to, their biggest concern is just the fact that they don't want to trade or they don't have the expertise to trade. Well, we kind of take that liability out of your hands and just put it into the strategy, which is rules-based. It's based off an algorithm, so it's going to trade the same way tomorrow as it will next month, as it will next year. So there's a consistent plan in place that will benefit the client in the long run. Advisory World, that takes the emotion and bias out of your recommendation, so it allows you to directly correlate a client's risk score to a portfolio. And let's just say you're doing an annual review for a client, and their score changes by 15 or 20 points. They go from a 50 to a 70, and you need to trade them into a different profile. That can be done as simply as sending in a trade ticket. And you could say allocate to profile 7. That ticketing system will display that entire process for you. And then when that's done, a client's going to log into Orion and see that occurred. So that's really as complex as it gets trading-wise. And Advisory World really helps make that simple for you. The form builder tool, that's going to reduce your paperwork errors and streamlines your business, especially for a lot of insurance-only agents coming over to a new side of the business where you have to learn a new set of paperwork. This is going to allow you to really hit the ground running and alleviate a lot of that concern you might have for not knowing what you need to submit. This helps populate that for you. The service portal, we talked about at length, but that provides the compliant, transparent view on operations. So you're always up to speed on what's going on with your business. You're never left wondering. And if anything's requiring your attention, you're made aware of it. And that's just going to make it quicker for everyone involved. And then for the compliance purposes, it's going to retain all that information. And then lastly, just going to Orion, it helps build your brand, and it provides all the information your clients would need to log in and see about their account. And even going a step beyond that, we didn't even discuss some of the reporting capabilities that Orion has to give even more information. But there is a lot more that we didn't discuss that will bring value to the practice there. So hopefully what we've talked about has tied everything off in a concise way. I know we went through a lot of information here in the last 50 minutes or so, but I think this does a good job of giving an overview on IAMS Wealth Management, what our goals were and are, what our processes look like, what our platform looks like, and how you go about implementing it and conducting business with us. So I thank you again for all spending some time with us today. The last thing before we get on to questions, I do just want to make a point about our advisor orientation coming up in late July. Typically this is what we use for any advisor that comes on board with IAMS Wealth Management to really come and initiate their process of becoming an advisor with us. It gives them that knowledge base of information they need to go out and feel confident with their clients as they're bringing this up. If you have any interest whatsoever about hearing about this meeting or like to possibly attend or just curious more about what this could involve, definitely get in touch. I'm happy to discuss this with you. But that will be occurring July 27th and 28th. That's a Thursday and a Friday. So with that said, I definitely want to open up the floor for some questions here. We have time for probably 2 or 3. I don't want to take too much time overall. And then again, here's that phone number and website where you can find more information too on your own. But as far as questions go, one person was asking, is this only apply for security license holders only? And that's a good question, just because a lot of people might hear this and think, man, that's great, I want to do it. It does apply to anyone who is registered with IAMS Wealth Management only. And there's a couple different ways to go about getting registered. The most common way that people hear is a Series 65 exam. You just go out and take the test. It's a 130 question exam. You need a 72% to pass. And then once you achieve that license, you can go ahead and register with IAMS Wealth Management. We've had advisors who have studied, taken the exam and passed, attended a training event of ours and written business in the span of 3 months. So when you think of it, it might sound daunting at first, but it's just when you think about it in the perspective of from getting a study book to writing your first piece of business in 3 months, it's well worth the commitment and the time that it's going to take, especially when you consider there's no ongoing continuing education or anything like that. Once you have it and you're affiliated with a registered investment advisor, you're going to have that until you leave. A couple other ways that people can get registered, which we've used with some of our advisors, that some people don't know, that a professional designation can actually waive the exam requirement. So if you're a CFP or a CHFC, that designation is of higher value than a Series 65 exam. So they waive that exam requirement. So if you're an existing CFP and you're interested in hearing more about IAMS Wealth Management or you want to register, the process is really streamlined for you just because you don't have to worry about getting that 65 license. The same goes for someone who might have their Series 7 and 66 with a broker-dealer. And I have frequent conversations with some of those reps as well who, are weighing the pros and cons of switching over to the fee side. But if you have a 7 and 66 with a broker-dealer, that does waive that 65 exam requirement too in most cases. So if you have any questions whatsoever regarding the specific registration requirements to your situation, give us a call. I'm happy to talk through it at length for you, and we can get a plan in place. And if you're needing a Series 65, we can help that too. We're not going to leave you to fend for yourself. We have a full service registration process where we go ahead and actually order materials on your behalf and schedule your exam. So if that's something you're needing and want to talk about, definitely just let us know. So as I read here, let me go through a few more questions. I guess this one would be better for Ryan. So Ryan, the question is, are clients' assets sold off each month to cover fees, or does it have to come from cash? Is there a money market available to move in the event of market crashing? Can we do ACAT transfers?
Yeah,
this is a pretty at-length question, but I'll let you run with it and then we'll keep going.
Yeah, so fees, generally speaking, there's a cash position held in each account on every given month. So generally speaking, there's about 3% cash in the portfolio that's held to the side to cover fees for allocation purposes, trading purposes, et cetera. In the event of a correction or the signals indicating that a trend is heading downward, we don't move to cash. That's where we move to that SHY position, SHY, which is 1 to 3 year short-term treasuries, in hopes that we earn a little bit better than what they could get in a money market account. So if they are taking distributions or something like that, generally speaking, we hold about 3 months worth of cash to cover those distributions.
Good. And then one point I just want to reiterate too is that with our accounts, I mean, they're wrap accounts. So clients getting the security of knowing their account's going to be tactically managed and rebalanced, but then they're not going to actually be paying for those individual outside transaction costs. That's wrapped into their wrap fee, so to speak. So I think that's important too. But just continuing on that question, can we do ACAT transfers in kind and then sell to go into these portfolios, or does it have to be sold off before transferring?
That depends on where it's coming from. So if it's coming from an ACAT eligible firm, which is most firms these days, you can just ACAT it in kind, get it into the wrap account at IAMS Wealth Management, and then we can just allocate accordingly there. The only time that you wouldn't want to transfer in kind is if you're transferring a non-ACAT eligible firm. Again, these are kind of rare. But the larger one that we've come up against, I'm not sure if it's even still the case, but Trust Company Trust Company of America, I believe is what it's called, out in Colorado. They are still non-ACAT eligible firm, is last time I checked, and they'll charge you per position when you're leaving, so you definitely would want to move those to cash and then transfer over. But generally speaking, you can transfer over in kind.
Okay. And I think, we have time for one more question. Let me scroll through. All right, it looks like there's a couple questions about compliance, so I'll just kind of speak with that just overall. And this goes back to even the slide early on when Ryan was talking about the difference between an RIA and a broker-dealer. Compliance is similar in a lot of ways and different in some ways too. On the RIA side, you're overseen by the SEC, and that's who we're registered with. Whereas on the broker-dealer side, that's more of a FINRA's area that they deal with. So one key difference that I think a lot of people are concerned about, at least coming from a broker-dealer side or who might be familiar with the broker-dealer side, is they're used to these occasional in-house audits, and that kind of, I guess, creates a sense of urgency. They're not a huge fan of having that occur, and it's time consuming. It takes you out of business, and I can understand why. On the RIA space, there's still that same regulation aspect of it. There's still that oversight aspect to it, but the SEC actually oversees us as an RIA firm. So anytime that we as an RIA get audited, they're going to be coming here to our home office here in Omaha, Nebraska, not our independent branch offices. The oversight of our branch offices really comes from the home office here. So that means we're really tasked as being the ones to oversee our branch offices. Now, of course, that doesn't mean it's the Wild West and you can act accordingly. But what it does mean is that we have a compliance manual. We have a code of ethics that we expect everyone to follow. And plus, we'll be doing routine office visits on our own just to come check in on each advisor and see how everything's going, at least in their neck of the woods. So in short, more of the oversight comes from your firm rather than an outside organization. And then it's our responsibility to be the ones to make sure you're acting within the bounds of what you need to be doing. So hopefully that answers that couple different questions that were touching on that same subject. So, Ryan, unless you have anything else you think is pertinent to add, I think we can tie things off here. Again, thank you all for taking a little bit of time this morning to come out and listen to us talk about IAMS Wealth Management for an hour. I know there's a lot of ways you could spend your time, so I appreciate you hearing about us. If there's any follow-up questions, some of you maybe didn't want to ask in a group setting, reach out to me directly. That phone number will work. Otherwise, my email is just charles@imswm.com, and that'll get to me directly too. So I'll get back to you as soon as I can there. But other than that, Ryan, do you have anything to add?
I don't. I appreciate everyone's time as well.
Okay, excellent. Well, with that said, we will tie everything off. Thank you all, and then we'll be in touch.
Thank y'all.